The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time, 877-927-6648. Love to get your calls. Had a lovely webinar last night, very intensive in terms of it being the stage that's being set for those who have done many courses in the Chapman Wave and those who are fresh. But I was really pleased to get some emails from folks who had just started off fresh yesterday and already starting to identify the peaks. That's great. So that's the first webinar. There's still time if you want to. If you want to, it should be up for review right now, and you'll have all this period in which to go all the way through the January 20th webinar. You'll get my newsletter, and hopefully you'll be able to glean a lot of knowledge from it. But to me, what is really important about it is I had to be as thorough. I had to forget the fact that my eyes sometimes glaze over when you got a lot of words. I tried to put as many pictures and charts as I could, but we went through it thoroughly to look at the concept, which is so simple that you want to identify a low bar and then merely count 4 successively higher peaks, and that's when other things can happen. Look at this. This is the E-mini. The high of 2213.75 was the all-time high at a peak C in the daily. It's a leg E/A in the weekly chart. Not even going to discuss whether it's an E or an A until the Friday when we get the close. It's a leg C in the monthly chart. The 120-minute chart recycled is in a brand new leg C to the upside. Now, whoops, where did it go? Right there. But look, from the 2028.50 low on election eve, you run up peak A, and then these are called floating letters. Let me just grab this B right now. It's called a leg B. From the moment it breaks that peak A high of 2180.50 at 2180.75, because it trades in 25-cent increments, you've got a floating letter. It's a B, leg B, leg B, leg B. Next one's a leg B, parallel highs, leg B, and then there's a lower high, and it's called a peak B. And then the moment that 2211.75 level is taken out at 221200, it starts leg C. It goes to C and then pulls back sharply. Now we're making a double top. What's the high today? 2213.75. It needs 25 cents and it goes to a leg D. All the little ducks are starting to line up, getting closer and closer to some kind of a sell signal. Shorter term in the daily charts, weekly charts are still, this is everything about it. I think it looks like an E more than an A. I'm sorry, everything about it looks more like an A than an E, but I still have to be very cautious, keeping it as an E. There's nothing to do yet. The signal comes from the rudder, which is the shorter term, which in this case is the daily chart. Probably 120-minute chart is the near-term rudder. Okay, have a look at this. We've got in the this is the NASDAQ. The NQ has gone right from the low today of 4763.50. This is the futures in the 10-minute chart to that doji peak E high at 3 o'clock on the 7th of December. It's come all the way down in trough A, B, C, D, E, F, and the G. Remember in my CD introducing the Chapman Wave methodology, I spent a lot of time on G's up and G's down. Well, here we go. Big move to the upside. Peak A, and it looks like this will be peak B. And what's the target? The target is, we'll see, by between 12 and 12:30 to attempt at least to get to a C and a D. And the target is this doji candle of the third with a high of 47.95.25. If I go to the E-mini right now has gone to a leg C, probably a peak C. And it's made the same kind of cup formation. After a huge arch formation, D, peak D, important D, comes down to a trough E, reverses, goes up, A, look, from there, this is the first peak right there, pulls back for 1 bar, makes a new recovery high, then drops sharply, doesn't take out the low, so that becomes a B when it comes up, back down again. This is leg C. That's all leg C, even though they were parallel highs. That is a leg C. It'll be a peak C if in the next couple of minutes this bar closes below that high of 2213.75. All it has to do is go to a leg D, and it'll break that, and it'll start something very. That's the 10-minute chart. Isn't that interesting? Hey, how about gold? Gold has made a peak E in the 10-minute Chapman wave methodology. We'll see how long this lasts and what's going to happen here. All right, so let's get to the nitty-gritties. We've got the time, we've got the place, and we're on our way. Dow, INDU. The Dow is trading up 15 at 19.267. For my subscribers and for those who sign up for my course are going to be able to get my newsletter for the next few weeks as part of the program. What's really important is in my overview this morning, what I was talking about, well, there are a bunch of things that are going on. Let me just show you here. This is the daily, and this is the pattern that we looked at last night. It's straight line, rectangle formation, straight line. And we're in a leg E as of yesterday. And this is what we're looking at in terms of the pattern. Straight line. It's like a stalk leg, but it's has a different connotation. And what I said is I would expect that the Dow, if the Dow can hold upside, watch the Dow plus 20s to a plus 30s mid-morning for signs of strength. That's going to be really important, and I think that I'd say that I believe there should be a mixed close today. Why mixed close? Because I think that there's residual strength in some areas. Other areas have been very weak and are going to come back a little bit. But most importantly, I've got something that's fascinating here. If I can just find it, give me 1 second. If I don't find it, I'll just move on to something else. Yep, I'm not going to find it right away. Pity, because I wanted to show it. Yeah, there it is. So coming up to the 120-minute chart, this is what I discussed, that the 10-minute chart needs to get to a leg D, and you're in an up channel. And this is the Chapman wave boundaries. There's a Chapman wave inside track repellent zone, Chapman wave inside track propellant zone, and we're in the propellant zone, which says that there's a good chance we're going to at least try by tomorrow to get to 19,275 or higher, which will start leg D in the 120-minute chart. So those are the things. And then in my overview, I said today might see a mixed market unless the Dow plus 35s, S&P plus 4s, comp index plus 8s at noon Eastern time, and the VIX remains under 12. The VIX right now is at 11.46, and the S&P is up only $1.48, and the Dow is now up 21. So I was looking at this as limited upside in certain areas, but the idea is that you've got catch-up going on in some of the others. So let's go on. So the Dow parameters, oh, this is nice. We are at 19,270. 19,270 means highs 76. So that means we've gone to leg F/B in the daily, and we've gone to the leg D in the 120-minute that I was just showing you a moment ago. Isn't that interesting the way this works? Basil Chapman didn't even finish all the indices, but I'll be back because it was important that I did some follow-through for those who went to my webinar last night, who are watching today. It's because they need to see just exactly how this unfolds in real time, as we did last night.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So, yeah, a couple of questions I got. I'll go through them in a moment. The IWM is at peak C. A leg C. It needs to go above 134.91 to continue that. It's down 8 cents right now. This is one of the lagging indicators and now a leading indicator. That weekly chart suggests to me this is probably leg B, and the 120-minute chart has made a peak C. It should still go higher. So I'm anticipating that probably today we will extend this leg C. What is fascinating to me is that the MDY, the S&P mid caps, is only in leg B. This makes it so confusing. One of the reasons why we are still long both the Russell 2000, the IWM, and the Dow is that. And I put in a scenario today, what we would do to switch to the other side, the short side, but there are only certain conditions that have to be met, because the rotation, and there's a high-level rotation going on, and this high-level rotation is saying, hey, the laggers are trying to run, and the MDY, it could only, the soonest it could make a peak D, let's just say tomorrow is down, that's Thursday. And Friday is up. So the earliest it could make a peak D would be Monday. So this is just fascinating, making it a little difficult for me to even feel comfortable wanting to short at this particular point. I don't like the action of the QQQ series. It's just not doing very well. Look, I told you, I don't like Amazon. I said it weeks and weeks ago. Amazon is in trouble. Google, Alphabet, trouble. Netflix, not bad, not bad. Maybe not so much trouble. Maybe it could still run up because of the holiday season. People, I think that's the one place we can go. People can go to. Netflix, Apple was running a little bit, and it's just dead. I mean, there's just nothing there. Netflix, Facebook. I think it's kind of stuck here. I think it's making a hat trick top for at least a good timeout, a couple of months maybe. So this is the situation. That's what's impacting the QQQ. So my look here is I needed to do this. I completely forgot. Let me just show you. Corn is just chopping around in this pattern that's got the U-shaped pattern that could go to an M pattern. Wheat, das Wheat. Same thing. Look at I wanted to do. I looked at it yesterday. Oh, Larry was talking about it. It was hogs. HL is HL. What is hogs? Anybody remind me what the symbol is? It was really interesting. He had brought it up, and I quickly grabbed the chart. No, of course, I'm not going to remember. Someone will have to help me. I just don't remember what the hogs are. Oh, wait, I've got it somewhere here. Nope, I took it down. I thought I had the list. Oh, no, it's not here. All right, someone will help me. But in the meantime, look at the IYT, which is the transportation index. It's in F/B to the upside. The MACD and stochastic are still holding really well. Huge move up in the weekly chart, which says at some point we will get this flag, at best, we'll get a flag pattern consolidation from the 165, maybe even down to the 156 9-period moving average. But right now, it's still doing very well. Now, this is going to be so interesting. Why? Because within the context of these different markets and what I call the rotational aspect, when we look at the VIX index, look at this. The VIX is down to 11.49. I said to subscribers, I wouldn't be surprised if we're going to be looking at the VIX and maybe start to become very interested in it. Maybe it's at 11.48, maybe the 10.60, maybe even the 10.20s. We'll see. It's getting very close to at least a pretty decent rally. The all-time low was 9. What did I just say in the den? 9.39 back in December of 2006. And then it went from December of 2006, 9.39 to 89, a tenfold increase, a 10-bagger. October of 2008 in the bank crisis, 89.53. All right. HE, thank you. I knew somebody would be listening and helping me out there. HE. Oh, thank you. HE Hogs. Was it Hogs? I do these charts as I see them. I don't know what I'm doing. I had this and I looked at it. It was really an interesting chart, and he had mentioned it. And HE, I'm not getting anything on the HE. I don't know what it was. Anyway, high-grade copper looks to me like it's just about to pull back a little bit. It has a spectacular run. It's going to start the ball rolling. If it breaks at 2.63, if it starts to go into 2.52 in the next 5 trading sessions, it would tell me a lot. Yeah, I'm not getting it. Usually I can go at, and then I can go to whatever it is. Hogs, HG's copper, hogs, H, feeder cattle, HC. I'm just guessing. No, I shouldn't have said anything because I didn't have it in front of me. So I'm sorry. So IYT, you see, this is very important for Dow theorists. You've got the 167.80 was the high in November of 2015 for the iShares Dow Jones Transportation Average Index. Today's high is 165.80. We are just 2 points away from an all-time high, and this is incredible. This is what's buoying the market. So I like it. I like it a lot, and it's getting a little toppy. But at this point, I'm just waiting for some kind of a signal to say it is done. Now, I wanted to also do natural gas, NG. There it is. Natural gas is very strong. It's in leg B to the upside. How did I miss that? I saw it coming, and then I didn't give it to subscribers because we would have bought the UNG, which is also, this is a UNG's one leg higher. And I had left side, right side price time match for today to try to hit the peak F top of the 13th of October, 9.64. And we're a high today of 9.45. Gee, 9 cents away. When is it 9 cents? 19 cents. Yeah, very close. So, very close, and we'll see what happens. So that's that. I want you to look at crude oil, CL. Crude oil right now is pulling back again. It's holding the 9-period exponential moving average from that peak D top. I think I'm just going to say it again. I think crude oil is in a trading band. It did break out, but that was news related. And now it's saying very clearly that between 53, maybe 53, 54, and 44, I think that's the trading band for the next while to come. We'll see. That's what the chart indicates. A question here about the IBB. Haven't looked at it for a couple of hours. Wow. IBB is down 12 at 262. We went short again. Remember, we had this short from the very top. The all-time high was 400.79 in July of 2015, and we shorted it at, I believe it was 393. I should have it somewhere over here. 290. I don't remember. 299, 301, short 295. Oh, it goes back even further, right? It goes to last year. So yeah, there it is, 400, and we were short right there. So then we were short at about 390 something, and we took $111 profit, 393.10, and we covered at 281 for 111 point profit. And then I don't know what happened. I just kept missing, wanting to go in, go out. But I did it every day. I showed it in my newsletter. And then finally, I said, this is enough. We're going to go short. I did not buy the BIS, which I was talking about, but we did short it at 274 a couple of days ago. The high was, in fact, 275.39, 274.84 on the 6th. And now it's trading at 262. I told you, this is not looking good. And my Chapman Wave 5 is in place to go to 220 to 208 at some point. So I'll be back. Basil Chapman, Tiger Technicians Hour. I think we've covered a chunk of things. I haven't talked about bonds. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. I wanted to just show you something really quickly. I got a question about these stocks, and I'm going to show them in a moment. Here we go. So I'm working backwards. This is Flowtech. FTK at 10.56 is down 255, down 20%. Look at this. The low that was made right here, the triple bottom low at 1076, 1076, 1079, back in November, started peak A right there, B, C, D. Look at this bump in the MACD, the moving average convergence divergence. But wait a minute, this is so important. I'm going to be teaching this next time, the 20th, when we meet, how you can look at divergences in the indices and make it real simple for yourself. Because look, it goes to a peak E. The peak D that was made back on the 22nd of November had a very powerful MACD, moving average convergence divergence, as well as the slow stochastic. But wait a minute, it pulls back sharply. I would have put a down arrow here, actually. Let me just be very... No, I couldn't. I couldn't because the MACD did not cross negative. So I would have put a plus sign and said, gee, I don't know what the heck's going on here. And then out of the blue, you get this news-related, must be news-related, gap up, island reversal, spike to a peak E at about 13 in the 13.90s. And then the stochastic is fading completely. And now look at this plummet from 13.96, was that? 13.97. It plummets down to today's low of 10.06. I mean, oh my goodness, that is huge. So just on the day, it's bad enough, 20%. But if you go back, it's 30%. This is really bad action. And it's made a peak D in the weekly chart. And look at this. The other question was was it ESV or was it ESV? Yep, the ESV. Made much better chart, made a peak. ESV is Enscope PLC, almost put oil service, but I think it's energy related. I just can't remember what it is. But it's leg C, maybe a peak C this week in the weekly chart, improving. The monthly chart is just horrible. It needs to break and close above the 10 to really break the 9-period moving average for the first time since it broke down back in July of 2014 in the 50s. And now it's trading at 9.86, 9.87, minus 71 cents today, down 6.71%. But it had a very strong day yesterday and gapped down. I think it's being influenced by something else. I can't put a down arrow because I can only put a plus sign because the MACD is still good and the stochastic is still at 84% very good. So this is one to watch because if it can contain it's a 986. It could pull back even to the 920s, even to $9. I'd prefer not lower than 928 actually. And then if it holds steady, I think it could start a leg D. I like this. Out of the two that you showed me, Bob, one is horrible, but the other is very interesting. Enscope PLC at 988. I'd be watching. I wouldn't do anything right now. Normally I'd say nibble. I wouldn't even nibble. Give it a chance. I just need a little time to see what it does. And if it spikes high, that's fine because then it means you're going to have to enter it at a higher price, but you still will get that 200-period moving average test at 10. So I hope that helps you. Oh, wait a minute. What was the question? Too dangerous to short in the Chapman wave? Oh, well, the one, I would say FTK. The way it looks right now, if it closes above FTK at 10.52, if it closes above 11.14, I'd say you have to wait a little bit because it can rally a little bit more, but it's in the shorting category. But to short it right now, if it closed here at 10.51, I wouldn't be surprised if it has another very, very bad day tomorrow. But this is too tough. I don't want to give it to you. I probably could do an analysis for myself, but the MACD and stochastic in the 120-minute chart says, hey, it could go a little bit, but it's getting a little lower, but it's getting really close to some kind of at least a bounce attempt. I'd say wait. You've missed the best opportunity. That peak E was really the tell. I wish I looked at it a little earlier. I mean, a few days ago. So the comp index, I had a question about the comp index. I wonder if I've updated it. Comp index, yeah, look at this. It went to a peak. Oh, man, the Chapman wave, it just, all these years, hundreds and hundreds of thousands of charts, and my eyes just pop right out every time I see it. Look at this. The comp index went to peak B, peak C, and a very quick D. What's my rule of thumb? I didn't discuss that last night. I probably will. Maybe I'm going to put this down. I've got another example I'm going to show you of the Eiffel Tower that I'll send out for subscribers tomorrow. Here I'm going to do one to show quick B, C, D, and this is comp X. So hopefully I'll remember to show it tomorrow as a great example of a very quick ABCD. It's more like the BCD part, and that usually says be careful because there could be a sharp pullback. It doesn't mean to say it's a major sell, but a sharp pullback. In this case, it turns out that it is maybe a major sell in the daily, not the weekly, but the daily of the the NASDAQ Composite Very Broad 2000 Stock Index. So that's that. Now, the next question was, in making new highs, a negative divergence. No, I think it's a divergence that I'm aware of, but my attitude right now is to say that we are playing catch up in summer. Look at this. Here's the New York. I don't think I've showed it today. NYA.X. It was. Look at this. It's up 0.36%. The Dow's up 0.17. S&P's up 0.11. This is the lead. One of the leaders that is playing catch up. The IOWM, the MDY, mid caps, small caps, and the New York Stock Exchange are the leaders at this particular point. I love it. I don't really want to go short while they're doing that, because it means, yeah, you might get a little bit of a pullback, but these are going to drag the indices higher. So the New York Stock Exchange, this is a fabulous move. It looks more like a B than an F, but I'm not going to do anything yet. I'm just going to leave it and say, let's see what happens. But it's acting extremely well. Wow, I just got a whole bunch of emails. HO, heating oil. Heating oil is made, isn't that interesting? 6634, 6631, this is a leg D, and we'll see. It's holding very well after a peak D. I like it. And leg C in the weekly chart, I just think it's going to make slightly high highs and slightly low lows for the moment. And it failed. Oops, that should be there. And it's making a cup formation. It's kind of breaking out, and it's almost in a leg B, 1.6771, 1.6774. I think I must double check that, but I believe that this is a leg B in the monthly chart. Heating oil is coming alive, not looking fantastic, but it's coming alive. So now let's do this. We've got, so there's heating oil, distillates, 2.5 million build, MM build, I don't even know what that means. Bearish, no, not bearish at all. It's holding very well. In fact, in this season, I would not be shorting heating oil. I just don't see, if anything, I'd be wanting to buy the pullbacks. I think that's more or less the way you need to look at it. Crude oil, upside target, 55. I don't see 60 yet. I do see crude oil. I see it holding quite well. I'm just going to reiterate. I think it's somewhere in the 53s. Yes, it does break the trend line, but I think the 53s is a limit to the upside at this particular point, and the 4 was the lows. I'm going to raise that to maybe the 45, 46 area as the support I'd be watching. So yeah, crude oil, that's the way I'm looking at it. Vale, got a whole bunch of really good questions coming up. Vale, I'll look in the den in a moment to see what's there. I'll have to do, oh man, look at Vale. It was down at $2 at the beginning of the year. It's trading at $8.98. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So just a real quick thing, U.S. Steel in leg D daily, leg D weekly, leg C monthly. Just an amazing move going from the 6.8 level earlier in the year to 36.88 right now. Just a stupendous move. AKS Steel, same thing, going from the 5s to 10.84 double. I've got this as leg F. I'm going to call it F for now. I'm just saying if you're in it, I definitely would take a little bit off now. It's just been fantastic. Reward yourself and then get ready to put that back at 10.84. Get ready to put it back in the low 8s maybe. You got yourself 2 points of a gain that you can mess with. And the actual index itself, the SLX, has gone to, I'm calling this a leg E for now. Don't see why I shouldn't call it E. Everything about it looks like an E. And leg C in the weekly. So it's still very strong looking out, but just shorter term, it's getting a little toppy. Then the question of Vail came up. So Vail is Valet. I've got this as a D. A gap up to a D. The MACD is a little bit lower now than it was when it went to the C. The high today is 9.32, and the gap low is 8.95, and yesterday's high was 8.82. So it's got a 11.11 cents. That's usually, this is the second gap. It's actually really the third gap. That's very noticeable. Actually, no, it's 4, 5. It's had a bunch of gaps. And now it's saying to me it's getting so close to the 9.60, the 200-period exponential moving average, that I think it's getting ready to pull back. My eye says later in a couple of months, the 1271 200-period exponential moving average will be a target. On the very next pullback, if there is such a thing as a pullback, I would suggest that it's something to keep in mind that you want to the best move is done off the low, the best percentage move, but as a position play for later on in the year, I would love to see all of these pull back 20 to 25 or even 30%. So I just wanted to get to that. Question I had about Rio, R-I-O, Rio Tinto. Oh, I haven't updated this. Leg B in the monthly chart, A, B, C, and then it has an inside A, B, C, D, E. This is an F on the 200-period moving average. Got a gap up. I think it too. I'm not going to do the wave count right now because I'm telling you, it's getting a little toppy. I would not be buying it now. I wouldn't be shorting it, but I'd rather be looking to buy it on a pullback. Now, I say I wouldn't be shorting it. I'm going to be doing a little homework tonight because there's a chance I might, for my subscribers, land up shorting one of the steel stocks just as a trade. And just one of the reasons is I wanted to be looking at it as a long, but maybe just having it as a short to see when the short's not working will tell me when to buy it. We'll see. So we're going to go to Rich in Orlando. Rich, how are you?
I'm doing very well, Basil. How about yourself?
Very well, thank you.
How's it up where you're at? It's nice and sunny down here in Orlando, Florida. How's it up where you're at?
It's gone pretty darn cold, and we've had I'm the first one to complain when we have lousy weather because I don't like lousy weather. But I have to tell you, this summer going into the fall, right up until a few days ago, has been absolutely fabulous. There's no complaining as far as I'm concerned. I'm prepared to put up whatever winter has for us now, at least for a little while, because we've had a really good period up until about last week. So, yeah. So you wanted to look at natural gas?
Correct, the UGAZ.
So let me do this. Yep. I wanted to ask you, what position do you have?
I'm in an awkward situation because I've got a very, very nice profit. And it's like, to me, it looks like it should be pulling back, but the thing just doesn't seem like it really wants to yet. And with the cold weather coming this way, and they're saying that the next couple of weeks the worst is yet to come. I'm leery of where I'm at. I'm in at 25, and right now it's right around 47. I mean, that's why I'm calling.
There's a really good way to do this. Number one is if you've been long and you've made a really nice profit, and now you're getting a little nervous.
Yeah.
That nervousness could be part of. It's part of, I wouldn't call it part of the trading plan, but it's part of something inside of you that's saying it's stretched beyond what I was expecting. I'm not complaining, but it's making me a little cautious because if it suddenly gives a lot back, what would I do?
The problem with these ETFs is exactly that. It can take away as quick as it gave it to you.
Very quickly. Now, this is, if you don't mind, I'm going to do this. I'm going to go to the natural gas. Sure. And the UNG, natural gas being the root, which is in leg B, very strong.
Right.
It looks like it wants to tackle the high of the 13th of October, 3.866. If I go to UNG, which is the 1-to-1, long side, I believe it's 1-to-1. Yep, the United States Gas Fund. That's peak F on the 13th of October. That's at 9.64. And it's trading right now very close to that at 9.45 was the high. It's trading at 9.28. Here's what I'm going to recommend. I don't know how much you've got. If you've got enough, I love the way the chart is looking. I've just got to be a little careful in that there's a V-shaped pattern in the weekly chart, a huge, very strong V-shape, straight down for 4 weeks and straight up for 4 weeks. And that invariably says to me, probably you're going to go just a little bit above the previous high, and then you're going to go consolidate. It doesn't say you're going to break down, but it does say you can consolidate. So here's what I'm thinking. If you have enough that you could take off 1/3 right now, saying to yourself, it's still it looks like it really wants to go higher. This is just the beginning of the season. I don't want to get out of my whole position. I'm going to divide it into 3 parts. The one, look, your UGAZ right now is trading at 46.18, right? My 120-minute chart says 44.31 or 44.60, somewhere in that area will be the first good support, but it's probably going to pull back under that just briefly if it pulls back. So that's 2 points. 2 points is only 5%. It's not a big deal because you've made a lot of money. So here's what I'm thinking. If you take off right now at 46.29, I'm saying 1/3. It doesn't even have to be 1/3. It just takes something off. That's number one. Number two is I would have a stop on, if you're dividing it, say, into to thirds, your core position, I would just hold that. You might be able to hold this core position for a long time. I'm just saying that's the way the monthly is looking and the weekly is looking, that you might be able to hold it because I don't see it breaking below 32 for that's the way it's looking right. 36 to 32 is very strong support. And I don't want to get you out of the whole thing before it looks like it's completed its move to the upside. The MACD and stochastic are very good. Here's my plan. You could put a stop in at 46.25 for today. Give it a little bit of room, or you could even do it at the low of the day of 45. But I'd say 46.25, 46, somewhere around there on a small position. And use that as a trading stop. If it holds and tomorrow it pops up, raise that stop proportionately. That's number one. but you are preparing to take something off in the next day or two, the market will tell you what to do on that. The next thing is you want to put that back. Just put it in as a buy at something a little crazy like at 36.65. Whoops. Can you hold on?
Sure.
Okay, great. We've got Rich in Orlando. We're going to talk about natural gas. I'll figure out the plan, and we'll come back with the plan as soon as we get back. And then we've got Michael in Toronto talking about the IBB. We'll be back. Dow's up 45, S&P's up 367. Nice. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
All right, folks, just to follow up on that, you remember we were looking at the 10-minute E-mini. It's in leg D right now. It looks very strong. Dow's at 47. And a real quick question. We're going to come right back to Rich in 1 second. Just HL, which is HL in leg A, B. This is Harmony. Is it Heckler Mining? It looks okay. It's a gold star looking pretty good. Entry price. I would just, it's at 652, 620. Send me an email when if it pulls back to 620. I'm not sure that it's ready for a bigger move at this point. Okay, so this is what I was thinking here. Rich, with your UGAS, I'm going to make the suggestion that at 45.67, you take a little bit off and you just say, I want to reward myself, and I know it can go higher, but this is really a nice gain. I'm going to take something off. That's number one. The amount you take off, right here at 45.66, that one, put in an arbitrary buy to put it right back in. If it gets to, say, 40, between 41.20 and 40, somewhere around there, you're going to put it back. Your stop on your second position is going to be at about 38.50, and your core position, you can just raise it to a 2-point gain so that you lock that in no matter what happens. And then let's talk again. What's today? Today's Wednesday. Let's talk again maybe Friday or Monday if you can. Let's look at it and we'll reassess. But you could either put the stop in right now, or you could just put it 20 cents below what it's trading at right now. But I'm saying this is a good place just to take something off, even though it should go high, because my target on UGAS would be the left side high of the 13th at 54.89.
Okay. Listen, I appreciate it very much, Baz. I'll give you a buzz back later on in the week. Thank you so much.
You're the one that did the trade. Congratulations. Fabulous.
Thank you.
Let me know.
Bye-bye now.
Thank you. Bye. Let's go to Michael. Oh, Michael, I'm sorry you dropped. Michael, I'm going to do this. I know I took a little tad longer. The IBB, and if your question was going to be, what do I do now if I hadn't gotten in? I'm not sure that was a question. I'm just implying, because if you have my newsletter, you would have been in already on the short side. It's at 264. You could just nibble to the short side here at 264, but only really a nibble. Your best entry now would be 269 to 271. That would be the safer entry. So I hope that answers your question. I'm sorry that you dropped. Call again tomorrow if you have a chance. And okay, we're about to wrap up. Let me just do a couple of things here. One is, I know it's a difficult position to be. It's the same position that Rich was in with his UGAS. We have a very nice percentage gain in the Dow that we are still long. We're still long the 300% long the TNA, which is, we have a small position in that, which is the IWM. And now it's getting tougher and tougher because we're getting closer and closer to some kind of a pullback. But in the meantime, I'm going to try to just raise the stops and give other parameters, because the diamonds, look at this. I told you I love the makeup of the Dow in this particular phase. And what I said to subscribers for my 120-minute Dow chart, if there is a big spike to the upside, I don't know if I can call it going to a leg F. It might just be a recycle that I'm going to an F/B in the diamonds. I don't know yet. We'll have to wait for the close. So let's see what happens. And in the meantime, back at the ranch, you've got your swim lessons. I'm just going to emphasize again that the webinar I did last night, the 3-part webinar, this is the first one. It was really constructive. It was for both beginners and more advanced people. I try to cover as much as I can in the waveform, how to count it, etc., what we're looking for, why we're looking for it, how we're using trend lines and things like that. So if you want, you can go there, go to the front page of TFNN. I think you can still subscribe to that. And it's archived. So even if the people who couldn't make it last night are going to be looking at it as an archive, that's pretty much how you would do it. Because that second and third one is coming up at a perfect time, the 20th of December. Wow, perfect time to see what we're doing in the markets and how we're going to plan for it. And we've already started to plan for it. So thank you very much. And hey, have a great day. And I'll see you tomorrow. Stay tuned for those.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.